Many of our competitors that were leaders in the industry are no longer either here or they're a shadow of their former selves. A lot of institutions are still pencils down. Yet Viking has found a way to remain relevant, to remain thought leader, and to still find opportunities, diamonds in the rough, if you will, as we've ascended forward. Hey guys, good to see everyone. This is going to be a special podcast of the Wealth Unfiltered Viking Show. Normally Samantha hosts this, but I have had the privilege of coming on and today sort of guest hosting and moderating because I really want to introduce two of the most prominent people in Viking who are going to help in the next push upward from 2026 onward. So Alex Gill, our new Viking president, and Christopher Farinello, our vice president of investor relations. Welcome, gentlemen.
Thank you there. I appreciate the warm welcome.
Yeah, thanks, Vic. Happy to be here.
Yeah, absolutely, guys. So, I just had this thought process of we've had these amazing investor calls and talking to a lot of our proponents and our allies as we get ready for another pivotal year in real estate, especially commercial real estate in 2026. And so I was thinking, these are powerful conversations, these one-on-one conversations we've been having with all our investors in our partnerships, but I thought, why not share some of these insights with our general audience and a lot of the people who follow us, especially with the podcast and a lot of our materials. So that's what was the genesis for this conversation. And also, the timing couldn't have been even better when Alex has just joined us about 2 weeks ago as the new president of Viking Capital. It's no surprise that most people in real estate are going through challenges. We are facing interest rate tailwinds. We've been facing, low occupancy throughout multiple submarkets. There is uncertainty and volatility in geopolitical situations. The leverage is not exactly where it needs to be to create a tremendous amount of transactional volume. And in fact, there are people who are having issues with either their loan structures, and there's some turmoil in the markets. And so with all that being said, it's interesting how different companies are handling the adversity. And so I want to just take a minute and just talk about where Viking came from, where Viking is, and then the conversation with these two gentlemen is going to be where Viking is going. So Viking started off in 2015 as really a methodology where my partner and I decided, hey, how do we help high-income professionals invest in real estate? Because we were finding a ways of success with passive income through a lot of these assets we were learning about in Atlanta, in Texas, and other markets. As we found success, we formed officially Viking Capital, and we brought on professional leadership, and we started providing value to our internal network and the associated networks around us of doctors, physicians, lawyers, dentists, to really invest alongside, institutional partners and get these kind of alternative assets that they don't normally have access to with their IRAs or 401ks. As we grew, we steadily grew our leadership, we grew our thought leadership, and we grew our team. And we really had a nice run from 2015 up to about 2021. And then adversity really hit during the COVID, as well as with the floating interest rates, and then the unprecedented 500 basis point hike in interest rates that really almost halted all real estate transaction activities. And it's coming out of that 2021, 2022, 2023 timeframe that many of our competitors that were leaders in the industry are no longer either here or they're a shadow of their former selves. A lot of institutions are still pencils down. Yet Viking has found a way to remain relevant, to remain thought leader, and to still find opportunities, diamonds in the rough, if you will, as we've ascended forward. And we've grown our company, not shrank it. And I think a testament is to people like Chris on our team. And Alex, what attracted you to Viking as you were looking for your next position in your very storied and legendary commercial real estate journey?
Well, Viking's done a great job scaling the business to $1 billion AUM over the past 10 years. You and Robbie have done a phenomenal job out there raising capital, growing the portfolio. I believe last time I checked, we had 21 assets under management, so that's very impressive. So I love the chance taking an entrepreneurial venture and applying the mindset I learned working for blue chip institutional companies, putting in institutional grade policies and practices and really scaling the business to the next level.
And Chris, we faced a ton of headwinds and a lot of challenges, but why do you think that Viking has still emerged as one of the relevant leaders in the commercial real estate space?
I think a lot of it is two things. I think one, we were really nimble. So we were able to face adversity and come up with creative and unique strategies to not only create more runway and create more time for these properties to prosper and ultimately, get the returns that we were hoping to get. In the same vein, we created stronger alignment with the investors that were in those deals that were impacted. We created programs around creating stronger alignment, and that was really well received by the investor base.
So, Alex, people are curious, why would we even bring on a person of your stature, a president? Aren't I here? Isn't Ravi here? Isn't the all-stars on our team, Chris, Judah, Ed? Why would someone need a president with your caliber? I think I know my answer, but I'd love to hear how you've impacted the companies you've worked with, and where do you see the potential for Viking?
Well, I've got a 25-year career in real estate, working originally on the Indiana Jones Temple of Forbidden Eye ride at Disneyland as a construction manager, transitioning as an industrial real estate broker right after the financial and loan crisis. I got exposed to real estate early in that cycle, and I've been around for the dot-com and the great financial crisis and then the COVID reset. So, I bring kind of cycle-tested approach to the company. I got my start in the industry at Trammell Crow Residential, where I became a managing director in 3.5 years, sharing in the profit and loss of the business. We are really ramping up production, great financial crisis, and ended up owing more money on our construction loans than the value of the portfolio. So I was one of the founding partners at Mill Creek when we spun off in 2010. So went out and raised $250 million with Rockwood Capital in the state of North Carolina and scaled the business to where it is today, being in the top 3 multifamily developer investors in the country right now. So I take a lot of pride in what we've accomplished there and kind of really bringing that mindset and the lessons learned to Viking.
And Chris, what do you think are the top 3 to 5 qualities that Alex brings to Viking now that you've had a chance to get to know him and his track record and his expertise and his pedigree?
I think that, as we were looking for a president, what really stood out to me from Alex's background is, the transition from Trammell Crow to Mill Creek. So being able to go from a very adverse time during the GFC and then spin out kind of a new business that took market share and became one of the largest multifamily operators and developers in the country, I think was really impressive. I think that, after being at Viking myself for 3.5 years, I think every year we take more and more of an institutional approach. And as we grow and as we scale, you don't know what you don't know. We are, in many cases over the last 10 years, I think as a whole, the company has been learning from its own mistakes. And I think bringing Alex on as we look to scale and scale quickly, we want to start learning from some of the mistakes that he made in the past that we're not going to make as Viking. And I think that could be incredibly powerful. And I think when you get to this level, you cross over $1 billion of AUM, and you have the pairing of a real estate cycle, which we've all acknowledged that there's been adversity over the last few years. The same adversity has created a lot of opportunity. And I think where Alex's background and skill set is really going to be useful for Viking is as we see the amount of opportunity over the next several years and being able to take advantage of it in the right way, reducing our risk, having the right product, and creating a long runway for growth for all of our investors that partner with us.
That's great. I actually love everything you said there. Alex, specifically, when we had our conversation, our chats, and you were contemplating coming on board, I sort of threw out a mandate there. I was like, Viking needs to be at 3 billion in the next 36 months. And you were like, yeah, that's a possibility. There's a way to do that. There's a way to go beyond our first billion, which took us a decade to get there, to where our second and third may not take as long. And you've been there, done that in several institutions and several other organizations. What are the key ingredients you think to do that? And hopefully, since you're a master of cycles, since you've been through so many, we're blessed with the timing of this current cycle. But I'd love to hear your thoughts on this.
Well, the key ingredient really is capital. So working with our existing investor base, but also branching out to institutional investors that could write one check on investments when needed. So I bring a broad range of investment relationships to the table. Also, to scale the business, there's co-GP relationships, which I could also bring to the table. I know you mentioned you wanted to triple AUM in 3 years, and that's definitely doable. But capital is the mother's milk of what we need to get it done. So I think between Chris and I going out there, I think we could make that happen.
And let's talk about capital for a second. Our origin story was a simple one. We were successful professionals who were able to leverage our network to provide opportunities for investors with the principles and tenets of, obviously we want to grow people's capital, but we also want to preserve their capital as well. And even during adverse times, that's been our core focus. That being said, as we grow, as we expand, and people are participating and doing well in our projects, as a retail base, talk about the other buckets of capital, Chris, maybe, and talk about how we're starting to provide multiple opportunities for folks in different levels of the investment game to partner with Viking and our future entity, which I want you guys to start talking about, which is EIP, which is Elevate Institutional Partners.
Yeah, absolutely. So I think, to simplify it for everyone that's listening, you have different buckets of capital that capitalize basically all of the commercial real estate in the United States. When people refer to retail capital, what they mean is your everyday person. Think check sizes between 50,000 or less, all the way up to several hundred thousand. And you have high net worth, which are going to be your kind of accredited investor, but kind of on the low end of the accredited investor. You qualify as accredited investor, but you're not, writing $1 to $5 million checks. You have ultra high net worth, which is that structure where it's like maybe 500K to 3 million per deal. You have the ability to write a check. And then once you pass ultra high net worth, you start getting into kind of quasi-institutional. It starts with small to medium-sized family offices. You have RIAs, or registered investment advisors. And then you start getting into more institutional groups where they could be sovereign wealth funds, they could be insurance companies, they could be any pension fund, big institutional groups that are in every bucket of capital that I've just mentioned comes with pros and cons of using. And I think the higher you go in the institutional kind of matrix, if you will, the more demanding the capital is going to be, because really what they're focused on is reducing their risk. So as you go from top down, from institutional to retail, you kind of go through this range of risk is most important. And as you continue down that range, risk becomes slightly less important and the expectations for returns become higher. And it really boils down to smaller investors that don't have billions of dollars, have less money to place. They're willing to usually take a little bit higher of a swing because they're still trying to grow their wealth. And as you get to the higher end of the institutional buckets, you have people that have an immense amount of money that they have to place. They can't spend the amount of time identifying all the little deals. They're usually trying to find larger placements of capital, reducing their exposure and risk, and getting a really strong risk-adjusted return. I think what's beautiful about what Viking's creating is it's created a really great network of retail, ultra-high net worth, and family office capital. And now as we bring in, institutional channels of capital along the way, working with them is a little bit more arduous. They're going to have a different level of sophistication that's needed in the way that we display deals, certain types of deals that we bring on. But working with them at the same time that we're working with these other buckets of capital, are going to get the benefit of all of the deals being battle tested by these big institutional groups that are also looking at the same deals. And you've kind of seen this already happen with Viking with some of the institutional partnerships we've set up over the last few deals, which has been a really big plus. So it's a way to keep Viking honest, but also allow us to continue helping the investors that got us to where we are today. We never want to lose sight of them, because they're why we are here today with this opportunity.
Yes, yes, I love that. It's honoring our past while growing the future, you know? The concept really is, guys, we really want to, keep Viking Capital in its origin as really a haven for education of value to really cater to, with white glove service to the investor retail base. But with the addition of Alex and his institutional grade mindset and his relationships, we will now start developing and growing the institutional arm of Viking, which we're calling now Elevate Institutional Partners. And the goal is really to do these institutional level deals that really check the boxes for these institutions. And the relationship will be different, obviously, but it allows Viking to continue to evolve. We went from multifamily investor to syndication company to private equity to really an institution or institution-like organization. And so that is the evolution we're going. And then honestly, I think Chris did hit it on the nail by honoring our origin and all the investors that got us to this place. You guys are not going anywhere. You're coming along this ride with us, but now we're going to be able to give you even more options and more capabilities as we start partnering with larger entities such as family offices and true institutions out there.
Are you looking to build sustainable wealth and achieve financial freedom? Viking Capital can help you do just that through multifamily investing. With a team of seasoned real estate experts, Viking Capital conducts deep financial analysis and data-driven asset management to deliver outstanding returns. Their strategy focuses on low-risk opportunities with significant value-add potential, preserving your capital while maximizing long-term growth. Join them and be part of a success story. Viking Capital has acquired 30 properties and manages over 6,000 units, all thanks to their dedicated team and valued investors. Discover their current deal offerings at vikingmultifamily.com and start your journey to financial freedom today.
Alex, what do you see on the horizon with economic cycles? Let's talk about economic cycles for a second. What do you see in terms of where we are? And we're recording this for those of you listening in October 2025.
So I think we're at the best buying point in my career. I think a lot of developers are distressed right now, needing to sell properties well below replacement costs. So I think there's a chance to come in and buy Class A, newer properties at a discount. And with the slowdown in new development, if you're coming out of the ground or if you're stabilizing a property in the next 2 years, there's not going to be a lot of competing supply. So you're going to see strong rent growth, lack of concessions. So I think it's a really good time to invest.
So Alex, what do you mean by a discount? Can you help our listeners, our investors, our institutional partners understand what are you talking about in terms of the amount of discounts or cap rates, or how would I go about thinking about this?
So in today's climate, construction costs have been high. Interest rates have been high. It's really put a lot of pressure on development. So with that said, not a lot of new starts in 2025 and very few in 2026. But right now there's a buying opportunity for groups like Viking that are well capitalized to go out and work with developers or investors and, buy below peak pricing. The cost to build a garden apartment in Texas might be $240,000 a unit. And some deals that we recently looked at, we're looking to buy them for $190,000 a unit. So that's a significant discount to replacement cost.
Yeah, so that's about a $50,000 per unit discount, right?
That's right.
That's fantastic. And so, yeah, I haven't had the extensive cycle experience of Alex, but since 2015, I mean, these are prices we probably saw in like 2018, maybe 2017. Like, this is not something we've seen in a while. And normally you had to give up your firstborn to get a deal done, because it's so competitive, so much money seeking, all the yield out there. And so this is the time where a lot of institutions are penciled down. Is that correct, Alex?
People are cautious right now. There's a lot of things going on with the economy, with tariffs and uncertainty. So people are very slow to make investments right now. So I think those groups that have the relationships and have the right deal could really capitalize on a market that's set to explode.
And let's just take a pivot here. And Chris, I'll let you comment on anything before I move to the next topic.
Yeah, the only thing I would add is, and I think everything that Alex and you said is spot on, is I think it's a really simple story of supply and demand. And I think it's easy to look at where interest rates were and where they are today and say that's the main adversity. But I think the reality is that the interest rates being low and being considerably low from a Fed rate perspective from the GFC, and then dramatically low after COVID, there was so much reason to develop. And there was so much supply that came on in a giant wave. And whether interest rates stayed low or whether they, increased historically like they did, we were always going to have to deal with this massive wave of supply that was kind of a shock to the system. Now, I think what Alex pointed to, and I think was really, really on the nose, is the supply coming on, like the interest rates going up actually helped create this perfect situation that we're going into. And it was painful, and I don't think anyone expected it to happen as quickly as it did. But because developers had to shut the pipeline down, you've now had a lot of that supply absorb. So the supply-demand economics are evening out, and you don't have a bunch of supply coming online over the next 3 to 5 years. And interest rates aren't coming down quickly enough for many developers to hit the rapid pace of development that they were seeing in 2018, 2019, 21, 22. So what you're left with is a market that is going to have much less supply than the demand that is going to be needed or representative. And that creates an amazing opportunity. I think if you look back at times in the real estate kind of timeline over the last 50 years, in areas where you've seen a large amount of supply and then a massive dip, what resulted with it was investors had a really, really great runway for making return.
This really sets us up for, the kind of companies that can take advantage of this next cycle. And so Viking, I would say we're probably on Viking 5.0, 6.0. I'm not sure where we're at in terms of our iteration, but I think Viking has to continue to evolve. I always tell a lot of my colleagues and friends that, hey, if we don't disrupt ourselves, the outside, environment will. So I'm intentionally disrupting Viking in a good way by bringing on elevated leadership, elevated teams, elevated folks who've already been there, done that. And so, Alex, as your charge as being the president of Viking, I know there's 3 core areas you've mentioned to me that you really want to help us with: operationally, culturally, and financially. Can you give the audience, again, without necessarily, going into the granularity and details, but just overall, how's your thought process in sort of taking this, Audi and making it into a Ferrari, if you will?
Well, you're much more than an Audi, so you're a Ferrari to start. We'll just make it a nicer Ferrari.
Okay, there you go.
Yeah, really, my goal is to bring institutional processes and standards to the company, and just the way that we operate, really thinking things through, de-risking investments, and being able to have a clear direction to our investors of what our business plan is for each individual investment. Since we're moving the institutional around, looking for really good properties, Class A, B locations with a good story. That's what it takes to attract the institutional investors. So I think all our investors will benefit from the institutional discipline we apply towards deals, and the risk-adjusted returns that are expected by institutional investors, I think, will increase the returns seen by all our investors.
Yeah. And then I think you mentioned also even though we have such a strong asset management team, we're literally adding layers and strategies to where even the asset management team can have even more insight, more better dashboards, and really have that granularity needed in these adverse times to really manage our assets even to the next level. And on top of that, I think the goal is to maintain the strong culture that Viking has, but enhance it, which I think is a delicate balance, but I think you're doing a phenomenal job there, Alex. And the final thing really is operationally, really across, instead of the different departments working in silos, I really want to have an integrated approach to where, asset management knows what acquisitions is doing and vice versa. Investor services and investor relations are in symbiosis, marketing and IR, all of this with really clear oversight. And so what you guys are going to see, for those of you who've been with us for all these years, is even better, even more enhanced operational capabilities, reporting capabilities, which I know, Chris, you've been working with Ed on, and our ability to really predict what is happening in the markets and be proactive versus reactive. And we've always tried to pride ourselves in that, but we want to even lean more into that. And so investor confidence, investor capital is always protected and taken care of.
I completely agree. I think the ethos for Viking isn't going to change. We're still going to take the same approach. So the way that folks interface with me and my team, investor services or IR when we have a new deal isn't going to change tremendously. But I think the way that we choose our deals, we're going to get even better deals than the ones that we've been having. And I think the way that we report on our deals is going to get stronger as well. And if for no other reason other than institutions, as they start to work with us, are going to have really high requirements on the types of deals that they're looking for. So really tighter buy box, and the reporting is going to be of a standard that would match institutional investments. I think that's all going to be positive, and it should be evident from all the investors that are working with us, and they're all going to get to be a part of Viking's next stage of growth, which I think could be immense.
Let's talk about the different opportunities for investors and where they could place their capital. What are their opportunities? They can invest in stocks and options. They can put it in crypto. They can put it in treasuries. They can put it in real estate. And within real estate, obviously, there's multiple flavors. And I want both of you gentlemen to talk about perhaps, the timing of all those other asset classes and where they are in terms of peak highs versus peak lows, and also talk about within multifamily, within real estate, how does multifamily stack up?
Well, I think over time, real estate has been one of the best performing investments that people can make. Many family offices have a significant portion of their holdings in real estate, and that multifamily is an important part. Apartments are a necessity. It's essential housing. There'll always be demand for apartments. People always need a place to live. And I think Chris touched on earlier, the supply and demand imbalance is normalizing right now. So, we'll have high occupancy, and we'll start seeing rent growth again in the next year. So it's a great place to invest and ride it out. And it's had outsized returns, throughout my career.
Great. And then I would just stack on what you're saying with also the tax implications, especially with the recent legal changes and how 100% bonus depreciation has come back. And so, if you look at laws, regulations, and the tax code, and they seem to be incentivizing ownership of real estate.
Yeah, well, and for all the folks that listen to this podcast, typically, Wealth Unfiltered, we don't all ever focus just on real estate. And I think I'm on record saying that folks should evaluate all of this. They should build a well-diversified portfolio, and there's room for traditional equities, stocks and bonds. There's room for crypto. There's room for alternatives like real estate and others. Where I always caution people is be intelligent about your research and look at the macroeconomic trends. And then also look at what areas have. I focus on two things when I'm making personal investments, and I've shared with listeners in the past. First, I want to figure out what am I investing in and how does it work. Then I want to know how likely is it that it can be disrupted. The third thing I'd want to know is the area that I'm investing in something that I'm investing in because it's very popular and it could be too frothy or overheated. I think what real estate has really strong key fundamentals. So when people dive into the research on why real estate, why multifamily, those fundamentals still ring true. The supply and demand imbalance was something that I think was pretty short-lived. Broadly, there's a huge supply imbalance or demand imbalance, but you had this one finite area where a lot of supply came online, making it challenging for existing. Other commercial real estate sectors are much easier to disrupt. You think of retail, think of office, think of hospitality, where, something like COVID or something like work from home or technology massively affects and disrupts those business models. And I think traditionally over time, you get strong risk-adjusted returns, you get really great tax benefits, you really struggle to find other opportunities that are more risk-adjusted. Traditional equities are going to have their own disruptions that you have to look out for. And I think the biggest one is a lot of the growth doesn't seem to be tied to key fundamentals anymore. It almost seems like it's just moving up out of necessity. And I think that most people expect somewhat of a correction. So I would never advise someone to take all their money out of the stock market and put it in real estate, but maybe pull some of those profits back when things are frothy and reallocate to areas that are a little bit safer and are a better hedge against things like inflation and stuff like that.
Yeah, absolutely. So as we start wrapping up here, guys, what are some of the predictions or projections you see for either Viking or for the real estate market in general? Any other key objectives or insights you want to share with the group?
I think 2026 is going to be a good year. A lot of dry powder has been on the sideline, kind of waiting to see what happens. Deal flow has been down, but I think there's going to be a significant deal volume increase next year. I think the fundamentals are going to improve. Coming, we'll start seeing rent growth again and reduction of concessions. So I see good things to come.
Now, you've been through several cycles, Alex. How does this compare to the GFC, and where do you think we are in terms of years? Like, what year in the GFC, post GFC, are we comparing? If there's any kind of correlation you can make, I'm just curious to hear your thoughts on that.
Yeah, going all the way back to the savings and loan crisis, I was just starting my career, but having worked at Trammell Crow, a bunch of my senior Trammell Crow partners lived through the crisis, and that was the complete meltdown of Trammell Crow, the largest real estate owner in the United States, had to restructure the company. So a lot of the lessons were learned there. So I learned a lot from what they learned in the savings and loan crisis, what not to do. And then I got to live through the great financial crisis, and that was by no fault of our own. It was just out of our control, but we worked through it. A number of us stayed behind at TCR to work through the portfolio. And kind of the big thing we said is we're not going to get our investors a return on their investment. We're just going to get them a return of their investment. So they are happy that we diligently worked through each property, each asset, got it to the point where we could sell it and everyone got their money back and maybe a little bit of profit. So, learned how to look after your investors in that cycle.
Yep.
And then the COVID reset, that, you can't really control the interest rates going up like that, but that really impacted the market and just stalled investments over the past number of years. So I think it creates a great buying time right now for those that have capital and ready to go out and deploy it.
From what I can gather from what you're saying, it's more like macroeconomic conditions will affect everyone equally, but it's the internal mindset of the organization and the owners of how they navigate these complexities and still come through it on top and then take advantage of the opportunity dislocations create. Is that right?
Yeah, that's right. It's how each operator deals with adversity. Everyone is dealing with the same challenges. Some aren't handling it as well. Viking's doing a great job to navigate the markets. So, it just goes company to company, but it all comes down to leadership.
Awesome. And Chris, you were involved in real estate definitely through the GFC and then beyond. Where do you think we are compared to that most recent economic challenge?
Yeah, I think it's a different challenge completely. I think for that reason is one of the reasons I'm most excited about bringing Alex on, because I think different than the GFC, you didn't have in the GFC was this idea of kind of extend and pretend. It was like a debt jubilee, if you will, where everything just kind of crashed. Whereas in this downturn, it's a little bit different because banks have been extending loans. And I think what I've kind of identified as the next wave of really great opportunity, or at least what I think is going to happen internally in my own mind, is that you're going to have a lot of groups that have been extending their loans. The lenders had solid balance sheets, so they were able to extend these loans without being insolvent. And at some point, they're going to force a sale. And for some groups, that's going to be a sale below the debt. And I think that bringing Alex on is going to uniquely situate us because he has the relationships with people at these, whether they're the lenders or other groups that are going to have access to these loans to bring them to Viking. Just in the couple of weeks that Alex has been on, we've already had a couple investment committees for deals. They're exactly that. Lender-driven sales where the deal never went to market. They're selling it for less than the debt amount with really great opportunities for our investors. And I think as we scale EIP and the institutional side of Viking, being able to capitalize those types of deals and get those deals at that basis is going to be the next wave of multifamily success for Viking specifically.
So, guys, I'm going to wrap that up. This has been a robust discussion between the two of you. Thank you again for helping us unpackage all this for our investors and our partners. I'm really excited. Honestly, I think we're entering a new era. I think we're going to really have this more conservative underwriting, but it's going to meet with a bold vision. I really think we're going to continue to advance our mission of helping investors achieve financial freedom. But this time, we're going to have more of an institutional grade real estate aspect to it, which is going to be very exciting for everyone involved. You know, people asking, hey, what is Viking 2026 look like? I would say it's resurgence and evolution. We are resurging and coming back as one of the top leaders in our space based on our size. And then obviously, as we refine our systems, we go through the challenges, and we're poised for our next major up-leveling as a company. So investors, I appreciate all of you guys. Your loyalty and your support has meant the world to us. I appreciate you all. I'm excited about what the future holds. And with that, guys, thank you so much for joining us. And I will let Wealth Unfiltered continue in its back to its original host in future episodes.
Thanks so much, Vikram.
Thanks, Vikram.
Thank you for tuning into this episode. We truly appreciate your support. Don't forget to subscribe, leave us a review, and share the podcast with your friends. Until next time.